The dollar against the ruble has collapsed. We've seen the dollar strengthen by 30% at the time of recording this video against the Russian ruble as the Russian stock market has hit heavy with sanctions, the euro also declining as well. In today's video, we're going to talk about setups and we're going to talk about the latest in Forex news. Let's jump into it. Welcome back everybody to the channel. I'm here covering the latest in terms of Forex news and talking trade setups. I'm going to also show you guys a little bit of the setups and trades that I'm actually in myself. And we're going to jump into a whole bunch of different things that are very important to be watching right now. So the first thing you need to know is, of course, Russia hit heavy by these sanctions placed by the US, the EU, NATO, etc. We've seen heavy pressure, and take a look at the chart with me here. You can see the US dollar strengthening by a dramatic, at the time of making this now, about 27% against the Russian ruble. So obviously a very catastrophic day, and I also believe that if I always forget the name, IMOX, there it is. So the Russian stock market also down dramatically. And you may be asking, well, I don't trade the ruble. How can I be actively participating in this? Well, by ricochet effect, there's a lot of other markets that are being negatively and positively impacted by this. So we'll take a look at some piece by piece. The first thing I wanted to discuss was the Euro USD. Now, of course, the Euro, a very, very popular currency pair, in fact, the #1 traded currency pair on Earth, had some interesting moves recently. We have seen a little bit of a rebound here after the crazy sell-off that we saw on the open here of this week. You can see the 27th, we had a major drop on the euro dollar, a drop of about 118 pips, which is certainly dramatic. Since then, we've seen a retracement here, and my personal opinion is that very short term, I think that there is just a bit of a technical bounce happening here on the euro dollar, and I think that short term, we could probably see a move back up to the highs. Now, I'm personally not getting overly bullish on the euro dollar. In general, I am still dollar bullish, and as we sort of retrace to look to fill that big drop there, I do think that at some point the euro dollar is a short. In fact, in my personal opinion, taking a look at the 4-hour chart here on the euro USD, should we see a poke up into resistance around the 1.13 level, I am looking for potentially a short setup on the euro against the dollar. Again, why is the euro short bias? Well, here's my main point in terms of the euro. As we mentioned in the opening of this video, the Russian ruble collapsed, right? We saw a major sell-off on the Russian currency. Now, the reasoning for that is that US sanctions, NATO, EU sanctions, all that sort of stuff has a negative impact on Russia's economy. But it's not only Russia. Actually, think about it this way. Well, we have big bearish perspective in terms of Germany, who also does a crazy amount of trade with Russia. That is a really, really dampening effect on their economy, especially since they import a dramatic amount of oil from Russia. So overall, with Germany under pressure due to this and a lot of other countries that do a lot of business and a lot of trade with Russia, like France, Germany, etc., this has a dampening effect on the euro in my opinion, and as the euro climbs back, I am looking at this as a potential short going into this week, especially if we hit this 50% retracement at 1.13. Like I said, I think that that is where I could be potentially interested in hitting into or heading into another short setup. Last week, we took shorts inside of the VIP group looking at the euro USD. You can see basically what happened is if I drop it down to the 1-hour chart here for just a second, I basically went short right around this area. I've been covering my short trade here, so I won't repeat myself too much, but basically decided to get short here on the euro dollar last week in light of all the Russia-Ukraine situation, which again, worsening effects there have a sell-off effect on the euro, at least right now. And so until that stuff blows over, my general consensus is still risk off, still looking to sell euro, buy the dollar in this case. Next up, I wanted to discuss gold. Now, of course, a lot of traders here on YouTube, they're really interested in gold. First thing I want to say is please be careful. This thing is very volatile and very, very crazy to watch sometimes. So let's take a very conservative look at gold and see what's going on. Well, of course, gold has been strengthening dramatically off of this situation as well. This and oil have been strong benefactors from this whole Russia-Ukraine situation. As people are becoming fearful, they want to buy things like gold and buy things like the US oil, things like that, because the supply and demand has been offloaded, right, with Russia sanctions, things like that. Oil demand has gone up. We've seen oil rise. We've also seen gold rise off of that because of the potential inflation concerns that come with this. So when we look at the gold market, I'm just going to fix that. When we look at the gold market here, my thought process with gold is that I am bullish until further notice. In fact, we also recently had some interesting COT data. Let's actually take a look at the website. If I just head over to a1trading.com, We'll pull up the COT data for gold for here just a second. So COT data, this is essentially institutional traders and what they are doing in terms of their positions. It is a lagging indicator, the data that we have. Let's take a look here. So looking at the non-commercials, recently we have had an increase in buying from institutional traders. Take a look at gold here as of February 21st. Now please note the time of making this video is February 28th. It's the end of the month, so this is delayed in terms of data. We don't get this minute to minute or anything like that. But gold recently has been being accumulated by institutional traders, aka the non-commercials. So that gives this a positive catalyst as well. So in light of the situation, until things change, until something changes dramatically about this, the war situation, gold in my view is a buy. Now the question becomes fundamentally and sentiment, we have some bullish catalysts. Where can we actually look for potential setups? Well, looking at gold, I do like the idea of potentially re-entering should we see a pullback to 1850. Now, some of you guys may have remembered, I actually went long inside of the VIP group on gold at this level. Taking a look at the daily chart, let's take a look at this zone. So if I extend this level of support out, I do like the idea of potentially re-entering another long trade on gold, but I've got to see a pullback here. Let me highlight something that was kind of concerning to me recently, which was this idea here. You had this major sell pressure here on the 24th of February. Now, this sell pressure, if you think about it for a second, the amount of sell pressure that was required in order to make this happen on this daily candle is pretty impressive. We went from, at the open of this candle, 1908, all the way up to 1970, and then pulled back dramatically in the afternoon trading hours. You put that all together, that's a lot of sell pressure on gold, and short term, I do think that it has the potential to pull back here a little bit. So if we do see a pullback to that 61.8, looking around 1850, I do think that that is a potential buy on gold. Please remember, this is not financial advice, I'm just sharing my personal opinion. But overall, we are still bullish on gold until further notice. And until there is true signs of reversal based on fundamentals, I am looking to be long biased on gold and predominantly looking for longs only at a discounted pullback level. Like I said, technically I like the 61.8% retracement tied up with this supportive zone that we have around that 1850 mark. That's personally what I'm looking at with gold. Next up, I wanted to talk a little bit about the NZD and AUD currency pairs. Right now, I'm actually long, so we'll start by taking a look at a trade that I'm currently in. I'm up about 150 bucks at the time of making this video, 93,000 units open on NZD CHF longs. Now you may be asking why NZD? Again, we just got through talking about all this risk off sentiment that I have, gold bull, long bias, dollar bias to the upside, things like that. Why buy NZD? Well, the reasoning here for this is I actually had a conversation with Ivan earlier on my on the A1 trading stream, and we discussed this concept with NZD and AUD pairs, basically being that in terms of proximity, think about this. Euro, I'm bearish because this has close proximity and a lot of ties with Russia. Tons of trade between Russia, Germany, France, all that stuff has a negative impact. But Australia and NZD or New Zealand, right, they have much more ties to trade with China and the US, and so to some degree it's kind of like how much are they impacted by this situation? Well, again, when we talk currency pairs, we're often talking about choosing the best from the worst in terms of which place you want to park your money. To some degree, I do think that the NZD, with raising rates and looking hawkish, is sort of this place where people are wanting to buy AUD and NZD pairs. We actually see them coming out real strong right now. Here's Aussie dollar making a move strong to the upside. We have NZD USD making a move to the upside. Right now, people seem to be moving into these markets, and with that momentum, I'm looking to try and be a part of that. So I just decided to go long NZD CHF, bought it at support here. I sent this within the VIP group. Let's pop up a screenshot real quick of what that trade alert looks like. But basically my process with that is South Pacific, we see a lot of momentum coming in, and generally speaking, I am looking to try and capture those on a discount. We had a big gap down on the open. Depending on which broker you look at, by the way, you should probably see some gaps depending on where you look. Here's NZD CHF. In terms of a gap, you have this big dramatic gap open, right? By the way, some brokers will show a gap, some will not. Just depends on which one you're looking at. But generally speaking, if we see gaps in some of them, I'm just viewing that as a big liquidity filling point, right? So NZD CHF, part of the technical trade reasoning for that is that we had this big drop on the pair, and I'm looking for this to potentially fill that gap. So I initially, going back to my trade there, NZD CHF, pull it up on Oanda. So going back to my trade here, I bought it back here with the process of thinking that we could make a move of around 50 pips back to close that gap. So often in markets we see gaps, and what usually happens with gaps is the market wants to go back and fill that gap to test that very low liquidity traded area. If you think about it, gaps happen over the weekend in Forex when very, very low trading activity is occurring. So when the markets open up, a lot of times they want to go back, test that area where there was no trading in terms of large volume. It was done on very low volume to try and test to see if there's true value there. So my process with that, I'm up on this trade a little bit here. I'm looking to trail my stop loss to break even pretty soon. If I update that, for those of you guys who are in the VIP group, you'll see that. I'll probably look to update trail stops here a little bit on this trade and looking to try and fade that gap back up to around 62.40. So that's kind of my thoughts on NZD CHF. Generally speaking, bullish on those pairs until we have a reason not to be. Going with the flow a lot of times recently has been very, very much paying off, and just riding those trends is really pretty key. So again, got some upside there on NZD CHF. We'll be looking to trail that stop. By the way, if you'd like to join the VIP group, you see all the trades that are being taken by myself, by our other top analysts, Annie, Patrick, Ivan. You can see our trades, but more importantly, you can see the full reasoning why the trades were taken, and you can get it notified directly to your phone or to your computer. So if you have any interest in joining, check out the link down below in the description. And also, if you have questions, feel free to send a message to Drew. His Telegram chat should be linked down below in the description. So grab that link, send him a message if you have any questions, and hope to see you guys inside. Make sure to use the promo code, by the way. You get a 20% off discount that is ending today. So if you'd like to get into the group, now's a chance to do it for a discounted price. And that's all I've got for you guys today. Thank you very much for watching. Hit the subscribe button if you're new, and we'll see you back tomorrow. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.